Although 2025 has been the year of robotics and automation stocks, they too are not immune to uncertainty and doubt. Let's take a look at one such case with Team Green, represented by Symbotic, which unveiled its next-generation storage technology, designed to significantly enhance the performance of its warehouse automation system. The new structure offers increased storage capacity, faster case handling, and better fire suppression, and is engineered to deliver substantially increased storage capacity for products. According to Rick Cohen, chairman and CEO of Symbotic, the new technology represents a major leap forward in the company's mission to help customers improve efficiency, speed, and resilience, while accelerating return on investment. The company's innovative design provides ultra-high density for increased storage capacity and/or reduced footprint, enabling customers to fit considerably more products into a fixed space or attain a target storage volume in a smaller footprint. The new storage structure also features pre-assembled, precision-manufactured subcomponents that reduce the number of on-site assembly parts by over 90%, and lower system implementation time at customer sites. Despite the promising technology, Symbotic's stock was struggling at all-time highs after reported earnings that, while beating revenue estimates, disappointed on the bottom line. The company's revenue guidance for the upcoming fiscal fourth quarter was also modest, with management citing potential delays or lumpiness in recognized revenue due to supply and scheduling issues around its new warehouse product. Symbotic's valuation is also a concern, with shares trading at over 14 times this year's revenue estimate and 223 times this year's adjusted earnings estimates. While the company is a leader in next-generation warehouse automation and is clearly executing well, the stock's expensive valuation may make it less attractive to some investors. For more on stocks and crypto, follow Ascencore. See you next time.